Hey miners, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's video, we're pleased to welcome back Sam Tabar. He's the CEO of Bit Digital. They just came off earnings, but we've got so much more to dissect in today's video. Before we get into it, take a second, smash the like button, you guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comments section below if you're currently holding shares of Bit Digital, what you thought about their numbers, and your outlook moving into 2025. Now, with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, we have Sam Tabar, CEO of Bit Digital, back on the channel. They just came off earnings, but we were talking before we started filming. So much going on at this organization that we're excited to talk about in today's video. Sam, always a pleasure seeing you. Great to see you again.
Thanks for having me.
You're most welcome. So the first couple questions here have been pretty standard throughout the Q3 interview series. The first would be major updates since our last visit. Now, I believe you were on in mid-October, so about a month ago, but you've been very busy in this last 30 days, obviously with Bitcoin, Ethereum prices surging. Can you give us a quick update just on what you've been working on since the last visit, Sam?
Well, I mean, we just acquired a tier 3 data center about 35 days ago. So that's a whole new business line with 13 co-location customers that comes with it and a 288 megawatt pipeline in major metropolitan areas that we are very quickly executing on. So the business is full speed ahead. It's a pretty exciting time to be at Bit Digital. We started the year with one client in HPC, and now, we're ending the year with about half a dozen. Well, sorry, if you include the clients with Enovum, they have 13 clients, and now we're approaching a half a dozen clients in our GPU as a service business. So, that's about almost 20 clients, and we started the year with one. A lot of people dinged us about, having this client concentration risk. Well, we're close to 20 clients in total in our HPC business. What do you have to say about that now?
Remarkable. And we're going to get into that HPC business. Remind me to come back to the location of these data centers, Sam, because I know the location is super critical and you've had some great comments recently about that. We'll touch on that in a second here. The second question we've been asking has to do with human capital. So obviously in these businesses, whether you're Bitcoin mining, HPC, AI, the amount of people in the world who understand how to build these facilities, operate data centers, isn't a huge group, and there's a lot of demand for this talent. So we wanted you to speak for a couple of minutes just about your team, the human capital, and the experience that your group has at Bit Digital.
Yeah, I mean, the skill set as a Bitcoin miner kind of translates into the HPC data center, but this is how it translates. It's like becoming a Bitcoin miner is like a taxi driver, and then you switch into a Formula One car. Sure, it's driving, but it's very different. We learned really quickly that we needed to augment our talent base to really compete in the industry. The GPU as a service market has become more competitive, so we needed to recruit super top talent to effectively compete. The benefit of adding a super highly experienced and proven team cannot be understated, particularly in developing tier 3 data centers, which was not a skill that we possessed in-house. We solved a lot of these deficiencies by hiring a very proven head of revenue with an incredible sales track record, a proven chief technology officer that comes from another public company, DigitalOcean, and other key members across the sales and technical functions. And then we acquired one of the best HPC data center teams in the business through our acquisition with Enovum. So our collective intelligence in the HPC industry has gone up exponentially, and this is a huge advantage for us in terms of accelerating our time to market.
Good to hear. Obviously, on Monday, we're moving across now to earnings part of the conversation. We Well, I guessed from looking at the numbers during that quarterly period that we're operating there that we weren't going to see any miners with a net income. We did see one miner with a net income, but they did have a couple of one-off benefits during that period, not really associated with the business in terms of receipts of cash. But in terms of your quarterly earnings, a couple of things that stuck out to me was the HPC business now bringing in more revenue than Bitcoin mining, and that's expected with obviously with the the increased client base that you have delivering that revenue. However, from a loss position and an adjusted EBITDA, they were negative. I mean, tell me the highlights and then tell me some of the challenges that faced you during that quarterly earnings, and then we'll come on to look at how things might appear in the next few quarters.
Yeah, so yeah, our HPC business has done very, very well. No surprises there. There shouldn't be any surprises for anybody. We report that by the month. And it is now beginning to make more money than Bitcoin mining. So you've noted that correctly. The headline number does not look as sexy as it should be because there's an unrealized loss in our digital asset position, particularly on the ETH side. That is an unrealized loss. And that has since swung the other way, which is good. So because of that unrealized loss, the headline numbers don't look as good. If you open up the hood, the business is actually doing very well. We have a very strong balance sheet, incredible liquidity, zero debt. And I mean, I couldn't be happier with, earlier we announced a target run rate of $100 million in our HPC business. And we're currently 80% of the way there. And I'm confident we'll get to 100%, maybe even beat it by the end of the year. And we're doing this without the second tranche of client one, which is great. Like I said earlier, to have almost 20 clients in the HPC business, 13 in the co-location business through Enovum, and almost a half a dozen in the cloud business. We've come a long way from just having one client at the beginning of the year. So I'm really happy about our diversification of clients in our HPC business, and I'm really happy that I feel really confident that even though we're at the 80% mark, we have about 6 weeks more to go before the end of the year. And our sales team is super high octane. And I see the deals that are in the pipeline that they're furiously trying to close before the end of the year so that there's credibility on the statements we say to the market. I should mention, though, that when I say 80%, a couple of I'm including term sheets that have not converted into the MSA yet, which we're working on through the legal process. So I'm including the 80%. I'm including the term sheets there. Okay. The term sheets are not a done deal. They have to convert from term sheets to MSA, which normally happens. But sometimes if there's a legal term that people get stuck on and it makes the deal unattractive, we cannot consummate the deal.
Yeah, I mean, I looked at you're quite right to highlight the balance sheet. You have got a strong balance sheet in terms of the cash that you have available. You've got your digital assets, a stack of Bitcoin and 27,000 plus Ethereum on the balance sheet as at today. So you can, when I look at enterprise value for your company of about 330 million, it beggars belief as to, what you're delivering at the moment in terms of revenue from those. And it's only going to get better as you get through these next quarters. That's right. The one thing I did the one concern I did have, and I suppose, you look at the cost of mining your Bitcoin in terms of your margin for Bitcoin mining. So you've already articulated the HPC delivering more revenues, and it's delivering a great margin as well. The Bitcoin mining, when you look at energy and then the other costs associated, the lease costs, facilities, etc., and the profit share, it literally matched the revenue, which means that it's not delivering a contribution to any of the other costs of the organization. So your G&A costs, I'm assuming, obviously, as we look
Our
in,
our our
as we
G&A
look at the
costs.
Bitcoin price today, it's going to be a different matter for Q4. But in Q3, with the Bitcoin price finishing at 63,000, I think it was, it didn't look a great business segment.
No, I don't think people are buying our stock necessarily for our Bitcoin mining business. However, it's good to stay in the game. I did say in our earnings call that we will grow to 3 exahash by between February to June of next year. So we are growing our fleet, but growing our fleet really is staying the same given that the hash rate difficulty is going up. But we will be growing it on an absolute basis. So we are doing that. And I think it's important to stay in the Bitcoin mining game because Bit Digital is in the basket of Bitcoin miners. So there is a correlation. When Bitcoin goes up, we become a free call option on Bitcoin. And when Bitcoin goes down, our company is not as affected because we have the HPC business that delivers very reliable revenues. Our co-location clients in the Enovum business have contracts between 4 to 10 years. We are very solid in terms of a business having no debt, about 19 clients, and contracts that go on for years. And at the same time, we're in the basket of the Bitcoin mining basket. So when Bitcoin goes up, we can enjoy that ride going up. And if Bitcoin goes down, we're not as affected because we have this very lucrative, well-diversified HPC business.
Makes sense. I look at the Bitcoin mining as the icing on the cake here, Sam. It's a nice to have add-on to the underlying core business, which obviously is the HPC AI growth. Now that's the great segue, really. We wanted to actually talk, I think in early September, maybe the 5th of September, Bit Digital received a non-renewal notice for their Messina site. With Coinmint. So can you give us just a quick update as you talk about growing your exahash next year, positioning these facilities? Where do you plan to, I guess, backfill that space?
Yeah. So during the quarter, we were informed that Coinmint was acquired by a third party, and we received notice of termination of our hosting contracts at those sites. We've already signed term sheets capacity to replace the exahash lost from Coinmint. And provided that we upgrade the miners, which we will, we were using many S19 equivalent miners at Coinmint running at about 31 joules per terahash on average. And that was a considerable drag on the efficiency of our mining fleet. So by replacing this capacity with S21s or similarly efficient miners, we could replace with lower megawatts and improve our efficiency by 25%. So it was a good thing that this happened in a way because it forced our hand to make a long overdue fleet refresh. And we do expect to reach 3 exahash operational by the first half of 2025.
Okay, great. It's nice to hear you've already got a plan in place for that, Sam. Obviously, the Bitcoin mining, as you say, you're included in that basket. A lot of the viewers really want to know the updates, the information there. The fleet refresh as well is a real nugget that I think a lot of people have been waiting for. Now,
Yeah, we're finally doing it. We're finally doing it.
There you go. You guys throw a clap or a thumbs up in the comments for that one. Now, the next one, you've talked about the Enovum deal here. I wanted to get a little bit more details about this data center. $46 million purchase. I mentioned this really expanded the client portfolio. We were talking with some of the other CEOs this week, and they actually brought up the fact with CoreWeave, Core Scientific, there was some counterparty risk there just based on the size of the deal, the fact that CoreWeave is not public, and that it's a single client. Similar criticism, I guess, to what you mentioned at the start of the year for Bit Digital. Can you talk to us a little bit about what this data center not only brings in terms of clients, but does for that underlying business in terms of longevity?
Yeah, so this data center that we bought in Montreal is 4 megawatts. It's currently operational, and it's fully leased to 13 co-location customers. Please understand that 4 megawatts is the equivalent of like 40 megawatts in Bitcoin mining when it comes to HPC from a revenue generation perspective. These customers are locked in multi-year contracts, and we expect to be able to refill capacity quickly and reprice these contracts whenever they expire. And in terms of the 288 megawatts pipeline that we signed when we signed and acquired this team and this deal. Currently, we have 4 megawatts, and that'll rise to 20 megawatts by the first half of 2025 and 52 megawatts by the end of 2025. This is HPC megawatts, okay? Tier 3 megawatts. So look, the pipeline is spread across 10 sites across Canada in major metropolitan areas. We're currently looking at a US-based site that could reach above 100 megawatts within 18 months. That is something that we're currently very actively looking at and negotiating. But we're not adding that site to our pipeline until we secure a customer commitment and our own assurance that we could finance the build and meet the deployment target for the customer that we're speaking with. And that's just been a philosophy of ours. We don't like to announce aspirations. We want to announce when it happens. So look, we're very close to securing the actual real estate for the 8 megawatts that we're bringing online for the first half of 2025, and we'll be announcing that when we close those deals. And we're going to use mortgage financing for those respective deals since we're buying the property. So that'll be good for our balance sheet. Otherwise, we're still working on finalizing which sites we want to prioritize in that 288 megawatt pipeline for the remainder of 2025. We have a very solid list to choose from, and we're prioritizing overall cost and speed of deployment as we formalize those locations. And the main barrier for us is capital. Capital remains, the main bottleneck. If we had unlimited capital, we'd break ground today on 288 megawatts. But we do need to be judicious about our build out, and we have to protect both our balance sheet and our shareholder interests. We're, conservative when it comes to that kind of risk on our balance sheet.
Sure. Yeah, it makes sense, and appreciate the insight there. One follow-up, and then Anthony can maybe jump over to Boostedroid. I just wanted to ask about the location, Sam. I've heard many times you say on panels, on discussions, it's the proximity of these data centers to major urban areas that really matters. I know you just picked up this one in Canada, right near the major metropolitan. I think 40% of Canadians live in that small little area. Why is proximity and location so important in high performance computing?
Well, it depends on which stage you are in high performance computing. So for client one, we have our fleet in Iceland. You couldn't get more remote than that. In fact, it's in the most remote part of Iceland, and we're making great money on that. That's adding $50 million a year over 3 years from that particular client. And that client is building large language models. So that's the training side. And when it comes to training, latency is not important. If you're building HPC data centers in remote areas, you're stuck with only the training models. Now, when it comes to inference, that's extremely important. You need to have the data centers inside major metropolitan areas to reduce latency. And so we know that eventually AI will go from training to inference. That's the logic of AI. And so we're trying to position for that. And in order to position for that, you have to be very aware of latency, and you have to build data centers where the population lives, not where raccoons live. So that's what we're doing. And that's why, when we looked at this pipeline from the Enovum team, we saw they knew what they were doing. They were building out data centers, tier 3 data centers in major metropolitan areas because they knew where their puck was going as well. Sorry for all the Canadian metaphors, raccoon, where the puck is going. But that's what we've done. And that's really important. And I think that's going to be a topic that analysts and Wall Street are going to start becoming more sensitive about. When it comes to Bitcoin mining, it's about the cost of production. When it comes to HPC, it's about the location of your data center.
You've obviously talked previously about the contract with Boostedroid, the gaming company. Obviously, over the 5 years, it's about $1 million of annualized revenues, but you did indicate there's potential to grow that. What are you seeing from that contract at the moment? Are you seeing, the ability to plan growth? Are they looking to plan growth there in sort of like near or medium term future? And also, in terms of, we know that on the first set of GPUs that you purchased, you did a sort of lease back deal on those. Is that the strategy on all subsequent GPUs, or will some of them actually be purchased as part of your inventory?
Leaseback is really great financial engineering. So we do like that strategy. We'll be using that strategy more often than not, but I guess it really depends on the situation. And with respect to Boosteroid, the initial deployment is imminent. We do have really great growth expectations with Boosteroid. We expect another deployment by year end, and we'll continue to progressively grow that relationship throughout next year. Next year is going to be a banner year. We do think we are likely to deploy about 10,000 GPUs under this contract next year in 2025. A gradual deployment for us is a great scenario because it gives us time to CapEx across our business a bit easier than if Boosteroid said tomorrow they want a massive, huge deployment immediately, which would put us in a bind, frankly. So we actually really like the gradual, slow deployment for CapEx and capital allocation reasons because we have very huge capital needs in our cloud business, in our data center development business. Now we're upgrading the fleet on the Bitcoin mining side. Most of our discussions every day is capital allocation and which chick gets which food first. It's been a struggle every day.
And in terms of the large client that you initially brought to the table, which at the last time 50 million, going to 100 million, then put back to 50 million. Where on that particular contract, what are the conversations about growing that to? Was it, I think 92 or 100 million? Are they still going ahead, or what's the decision made on that deal?
The client delayed the second tranche of the contract because they wanted the Blackwells, the B200s, and that's not available yet from NVIDIA. I mean, nothing is formalized yet, but until NVIDIA starts distributing the Blackwell machines is when we can probably get the second tranche of this contract going. I'm proud to say that although we were surprised not to get the second tranche this year to get to our $100 million annualized run rate target, we're still able to get to that target with other clients. And I'm very proud of that. And we were able to do that in a matter of months. With respect to client one, we'll hopefully consummate the second tranche of the transaction next year with the Blackwells. Just as a note, they did give us a $30 million non-refundable deposit on that. So there is serious.
Sounds like it's imminent, yeah. Just so that for myself especially, and for the people that are listening, you talk about Blackwell, and you've just recently purchased some H200s. What's the difference between those? If they're not in the market, the Blackwell, what will the Blackwell bring that the H200s don't have at the moment?
It's just it's much more powerful. It's going to be an icon. You're going to be hearing about the Blackwells a lot next year because it's just the most powerful computers that ever existed. That's very much needed for where HPC is going, and the computational needs for HPC is just insatiable, and Blackwells can help meet that demand. And you have to have, by the way, have very sophisticated tier 3 data centers with liquid cooling in order to make these Blackwells work. It cannot be, it has to be liquid cooling with respect to Blackwells, and it has to be in a real tier 3 data center. So we're building all our tier 3 data centers in anticipation for the Blackwells, in anticipation for inference.
Yeah. You talked about, even I think just last week, you just announced some more clients. can you give us a bit more update on the time frame that you expect to get the revenue start to drive for those particular contracts?
Yeah, we expect to get the revenue recognition happening this year. So it's adding formally to the target run rate. It's a mix of private and public company. One public company that everybody on this call has heard of, and hopefully we'll be able to announce who they are. But the contracts aren't huge. They're smaller contracts, but we're very happy with that. We're not building things and waiting for hyperscalers to come to us. We're capturing the long tail. We're happy to get mid-market clients, sign them up, whether they're a public company or a well-funded private company. We're happy with, so long as we can lock them into contracts and get these revenues locked in, so we have visibility on revenue, and we're making money, and we're shielded from the volatility of Bitcoin. And at the same time, we will high grade and upgrade our fleet on the Bitcoin mining side so that we remain in the basket of the algorithms involved in trading with respect to Bitcoin mining. So again, what I'm trying to do is position so that the company is heads I win, tails I win. That's what I'm trying to do.
And with the purchase of Enovum, I'm assuming that all the staff came on board to Bit Digital from that purchase.
Sorry, I didn't understand your question.
When you purchased the data center,
Yep.
the staff came as part of the deal, did they?
Oh, absolutely. And the staff took equity instead of cash for Bit Digital. So they have shares in Bit Digital. So they're super aligned in building the pipeline. The team, of course, the data center was important, but the team was equally important for us. So there's continuity on the team. Everybody stayed intact. Everybody took stock of Bit Digital, and they're very hyper aggressive on moving forward on building the pipeline that we've announced to the market.
And in terms of adding, I mean, you've already got experience within the Bit Digital team. You've been doing HPC now for over a year. In terms of adding that experience to the team, I looked through the list of the senior staff there, and they've got a wealth of experience. You've been talking during this conversation about, using, more of the on-demand service with clients and all that. But your strategy is going out and getting GPUs and leasing them or on lease back deal. You might have to buy them on lease back deal like that. Core Scientifics, they're not even touching GPUs. They're just going to provide the facility.
That's right. I mean,
so they're doing HPC hosting. You're doing HPC provision.
Correct. We're more like CoreWeave than Core Scientific. A lot of people conflate us with Core Scientific. Of course, Core Scientific is a Bitcoin miner that is getting involved in HPC, but they're hosting. We're actually doing it. So it's a little bit different. So we're more comparable to CoreWeave than we are with Core Scientific. And by the way, the criticism that Core Scientific is getting about their concentration risk and that CoreWeave is a private company and it's not a public company, I would defend Core Scientific. CoreWeave is a unicorn, and when it goes public next year, it's going to be in the many, many billions of dollars. We should all want to be CoreWeave. So I would love to have the counterparty risk of CoreWeave as a client, and Core Scientific is extremely lucky and in a great position to have that client. So for those who are criticizing Core Scientific as a result of having just one counterparty being CoreWeave, that's a great problem to have. That's a champagne problem. Having said that, in our case, we do believe that, if you don't have client diversification, it's a trade, not a business. And so we wanted to create a business, and that's why we have such a great client diversification on the HPC side.
And actually, if we talk about the other deal, it's, CoreWeave aren't doing it for free either. They're going to make money out of it. And by you following that strategy enables Bit Digital to make good money going forward as well.
Yeah, absolutely. I mean, next year is going to be very interesting when CoreWeave goes public.
Most
Yeah,
definitely.
absolutely.
Hey, two other quick topics for you here. I love the heads we win, tails we win. The alpha position was one of the quotes we pulled from the last interview, Sam, and I think that really resonates with people. Now, I wanted to talk about Ethereum. You're a lawyer and a CEO, so you know law and obviously finance very well. You've talked about Ethereum really being a pivotal change in those industries. So I wanted to get your stance on Ethereum, and then we can maybe finish off with some of the comments around redomiciling to the United States as well. But for people who are newer to the channel, newer to Bit Digital, what is your Ethereum strategy? How does the wheel work? And what are you feeling in terms of Ethereum's bull run as we see Bitcoin now hitting all-time highs?
Yeah, let's just take a step back. Many years ago, Bitcoin mining proxies fulfilled a real problem in the capital markets because there are many capital markets participants who couldn't buy Bitcoin, but they bought Bitcoin mining stocks as a proxy to Bitcoin. Then many Bitcoin mining companies showed up to fulfill that proxy need. I would argue that there's a lot of proxies right now in Bitcoin mining. I think there are probably too many. There's like 20 some odd publicly listed Bitcoin miners. There's MicroStrategy. And frankly, there are a lot of capital markets participants that are now comfortable buying the underlying commodity, which is Bitcoin directly. And of course, you have the ETFs. That's a very crowded market. Ethereum, the second largest blockchain and a blue chip blockchain that many institutions use. They're using it already. It's a technology that they're using. Even banks are beginning to use it to disintermediate their back office and middle office. That's a 300 or $400 billion market cap with very little capital market proxies. There's ETFs, and they can't stake. Stake is capturing a yield on your Ethereum. You can't do that with Bitcoin, but you could do that with Ethereum. You could capture a yield when you stake it. So, we bought about 30,000 of ETH, one of the largest ETH stockpiles of any public market companies, and we stake that ETH. And ETFs can't do that. So we have become, in many ways, an ETH proxy. One of the reasons why the headline number wasn't as sexy as it should be is because there was in Q3 a loss on that digital assets position, but it was an unrealized loss. And since Trump's election, that has reversed, and there's been a bull run on ETH. I look forward to seeing an even better bull run on ETH because there's a lot of bearishness in ETH, which is in a way an opportunity. Because you got to just do what Warren Buffett says. You got to buy when there's fear and sell when there's greed. And so, we are staying patient on our ETH position. We know that it has technology that Bitcoin doesn't have. Ethereum has if-then statements that you can codify and program. So if I want to build an algorithm, I could create an exchange of value that happens automatically with Ethereum by programming it with if-then statements. Bitcoin is more just simply a store of value. Buy Bitcoin, it's like digital gold. It goes up and it goes down based on the perception and the buyers and sellers of Bitcoin. Ethereum is different. Ethereum is more of frankly, it's more of a nerdy play. It has programmatic functions. It could replace back office. It could even replace contractual lawyers because it has programmatic language. And in due course, the general public is going to understand that.
Hey, one quick follow-up there, Sam. You quote Warren Buffett to be fearful when others are greedy and greedy when others are fearful. Is there a point at which you would start selling your Ethereum if we do start to see that bull run or prices get a little frothy there?
It's a good question. I don't have a specific number. If and when Ethereum gets its bull run, it's been doing much better lately than before Trump was elected. Just as a reminder, President Trump was the first politician, I think, in history to use Ethereum to raise money when he did those NFTs a few years ago. Those NFTs did pretty well for him. So, there's lots of great use cases in Ethereum that people don't really know about yet. And in terms of when I would exit Ethereum, it would probably not happen for a long while because there's a lot of juice there that people haven't realized yet.
We've had a number of podcasts in the last couple of weeks with some of the overseas-based mining companies, and the conversation started to turn around looking at maybe domiciling in the US and opening themselves up to a lot of more domestic shareholders via some of the indices that are available for them to access. Is this something that Bit Digital is thinking about on its agenda going forward?
Yeah, we've announced that we will be filing as a domestic issuer. We think, as I've been here listening to people on X, there's a strong sentiment on the retail side that it would be a positive move to file as a domestic issuer. And frankly, many institutions that we've spoken to, many prospective shareholders, aren't able to invest and become a shareholder of Bit Digital because we are a foreign private issuer. So we are changing that to file as a domestic issuer, and we know that that's going to open up many investors to join our cap table, and I think that's a great move. I realize that there are more reporting requirements, even more transparency that's necessary when it comes to filing as a domestic issuer, but we're okay with transparency. That's been a North Star for us. Frankly, we already behave as if we are a domestic issuer because we over-disclose more than necessary. And I know that a lot of foreign private issuers don't wish to become a domestic issuer because of all the reporting requirements and all the transparency that is necessary. Some companies shy away from that kind of transparency when it comes to their compensation or certain other compliance issues. They don't wish necessarily to file as domestic issuer because they don't feel comfortable with all the transparency that's required. Bit Digital is very comfortable being transparent and following the compliance rules once we become a domestic issuer.
So, Sam, we've covered so much in today's podcast, everything from your expanding HPC AI client list. You've got Bitcoin exposure, growth, fleet refreshes, and of course, the Ethereum staking and exposure. I wanted to give you the opportunity to wrap up here. If there's anything maybe we haven't touched on or a final message you wanted to give to viewers.
Yeah, well, we're really happy with the trajectory of Bit Digital. We're really happy with the coverage that we've been getting from Wall Street. We have Clear Street that's covering us. We have B. Riley, we have H.C. Wainwright, we have Noble. We've come a long way with increased Wall Street interest and coverage. We're really excited to be filing as a domestic issuer, so that's going to unlock a whole cohort of shareholders that have been wanting to invest in Bit Digital, but couldn't because we were filing as a foreign issuer. We are having great momentum on our client diversification in our HPC business. We are vertically integrated with Tier 3 data center in Canada. We have an incredible pipeline of marquee Tier 3 data centers that we will be developing. All of this is going to be switched on for 2025, and our momentum with our sales team is only growing with the capture of a lot of the clients, including a couple of term sheets that we signed the last week with both private and public companies, some of which you guys already know these names. So we're really happy with everything. The only thing that is not our friend is sometimes the markets are irrational. Sometimes retail is a little bit impatient. There's nothing I can do about the volatility and the macro sentiment. But I do know that with Trump next year, we're going to have the first crypto president in the history of America. It's going to be a sea change for crypto. He's going to establish a Bitcoin reserve, strategic reserve for the United States. The SEC chairman's going to change from Gary Gensler to somebody else that is not going to be unfair to our industry. So it's going to be a really good time from a macro perspective in 2025. 2025, I predict, is going to be a banner year for everybody, including Bit Digital.
Very exciting times. Banner year 2025. That's the exact word I was going to use. You guys, this is definitely one you may want to take a look at. Bit Digital. I'll leave the website in the comment section below. If you're holding shares, if you have any questions for Sam and team, let us know in the comment section below. Feel free to hit the like button, subscribe to the channel. Sam, thanks so much for your time. We'll see you back here soon.